me record. Here we go. So welcome again to Doing Numbers LLC, support and resistance, trend lines. I got some tickets in there we'll be going through. And you probably notice while we're doing this now, I think it's just to kind of get all the videos together so that you guys can go back and look at this. And we're trying to separate the support and resistance or technical analysis from the research section, so we could have more time researching possible long terms and what have you. For now, we've only got about 6 in here, so but we definitely want to check out more very soon. But let's start with these ones here. I'm using my favorite Weeble. You know, well, nobody loves Robin Hood now, so I got Lou on the call. I got David on the call as well. They'll be chiming in with some nice nice tickers and nice observation and opinion as well. So let's go. So we start with this one. Let me start from the rare. Let me start from the Apple. I like Apple stuff for no reason, but so one of the interesting thing about this one, if you actually look at the trend line from way back then, you could draw the line here, or you can move it all the way up here, and just kind of. Well, sorry. Let me start from this one here. It'll make more sense. I'm trying to connect 2 lines, and I'm on a daily time frame here, so you could do that, or you could just connect this one here to. I mean, essentially, you want to make sure, like we've been saying since, we're not really interested in lines being perfect. We just want to have a good understanding, and we also don't want to be biased, because that's the thing about drawing trend lines. You don't want to draw a trend line thinking, he has to meet the price that I want, because a lot of people draw trend lines and they think, oh, it's got to be at the same trend line so that I could justify, give myself a good reason for joining in, or for buying something. If it's not on the trend line you want, you could draw as many lines as you want as well. Kind of give you like a couple of ideas of what's going to look like, and you got to keep in mind as well, a lot of these trend lines are just well, any line you draw, basically you have to have at least a few of them in there, so that if one invalidates, the second one holds, and you have a good range of what could possibly be your support and the trend line. But anyway, not to waste much time here, I'm drawing several lines in here. The one I particularly liked, and I was looking at this the other day, right, is the one from here, joining into this one here. So I'm essentially focused on this area and this area here. So I'm going to color this one black. Just make it dotted lines as well, so that at least it's different from the other ones. You will see when it bounced from here, it touched the line around here again. And because of all the WSB, GME pullback from the hedge fund companies and the whales, we got a nice pullback. So I'm looking at this area, hoping to see some sort of reaction, maybe a bounce on this line. I'm going to try and draw support, pull a line here as well, justify my, if it does bounce around this area. So let's color this one purple for a possible support. Obviously, we've done Apple so many times now, so I don't want to waste time with this one, but I'll put another line here. I see a couple of price actions around here. So if I were to play this, I'll probably go long, maybe a match option. Let's have a look at the option real quick here. Again, from the way I do mine is I look at the distance from here to here. It's about 15. So if it does go up, so I'm expecting a 15 jump to around that 145. But when you look at the 145, depending on how much you want to spend, sometimes you could even go even longer. Basically, I'm looking at March 19 now, so I give myself enough room for Apple to grow. When I look at the 145, it's about 395. But look at the open interest in that one. I see another open interest. It's crazy high here. It's about 96,000, but it's expensive for me anyway. I'm not willing to spend 530 on option on Apple. I look at the next big one on this. Well, there's another one here, 150, 61,000 open interest. I look at the volume, it's about 21,000. The price is not too bad. It's about 27% discount. This is about 24% discount. When I look at the 145, going back to the previous high, it's about 30,000 open interest, 395. So I'll probably stick to the 150, or if you want to get it cheaper, there's another one down here, I believe. So 160 is another good one, which is about 162, which is not bad. It's about 27% off as well. And look at the volume that came in on Friday, 11,000. So there's definitely some action. Yeah, another thing you have to do, obviously, you have to look at the Greeks on this one. So let's have a look at the Greeks real quick. My rule of thumb basically is my delta should be at least twice as much as the Fed. So if you look at it, it's 0.22 and 0.06. So this looks like a good one. 0.113 and zero point 0.5. So all these values here are at least 0.2 times more. So if it goes down, the IV is not bad as well. So those are the things you look at when you get a contract. But again, we're playing the trend line. I've done 2 support here. If I get in here, or if I could wait to like 129-ish, then I could possibly set my stop loss around 126. You can see it bounce like 4 times around that area. So that's definitely something for you guys to think about. Let me go to Ron. We played this one on Friday. I kind of like, well, I had to get out of this one because it was going sideways and I didn't want to wait. I'll show you why in a minute. So let me draw the line here. Again, it doesn't need to be accurate. All we're looking out for is just some sort of, let me pull it down here. So we're looking for some sort of reaction around that area. There's still more room to go here, but I don't think it's going to go all the way down here before it pulls back. Again, February normally is a pullback month, but we've had ridiculous pullback in the past few days because of the WSB, GME thing going on. A lot of the companies are covering their shorts by selling their long, so we have a good discount available for everybody. Let's change the color here to keep it momentum and keep it same with the Apple one. I'll draw another line here again, going over this one here. I'm interested in, actually let me move it here. So if it does bounce around this area, this is not good actually, let me go back here. So if it does bounce around this area, then I see, and I'll show you why I put it here. I'm expecting a bounce around here. So the reason is simple actually. If you look at this, put a line here, you see for yourself that there's a this line here was previous resistance around here a couple of times. Let me zoom in forward, and it kind of held as support around this area. Move it down a little bit. So I'm expecting, it was kind of support here that gave way, came back, resistance, broke through, came back down again. So I'm expecting a bounce. If it doesn't bounce, I have to look at the next support, which is going to be somewhere around here, which is the previous resistance-ish. It's, kind of bounced around there, held up ish around there, broke down, became resistant and became support again around here. So if I want to get on this again, I'm going to look for a reaction on Monday or the following week to see if it bounces around on this trend line here. If it doesn't bounce on this one, I'll be looking at entry around here, which is around 24. So let me just draw a quick trend line here. So I'll be looking for entry around there. You see it bounced around that line there. Move that guy up a little bit. As you can see, it bounced around this area. So I'm looking at 63.2 as an entry. And it could be your support as well, your stop loss. If you go in, let me just put this guy here real quick, change the color so it's more visible. So if it bounces, I'm expecting it bounces around 69.2 ish, or it bounces around 63. If it doesn't bounce 69, you could get in here again and set your stop loss here, or wait to get in here and set your stop loss at 60. So that's another thing you could do. But you could tell from the way it's been going up and down here, it's bound to either bounce around here or come all the way down to this main trend line. So that's definitely one to keep in mind. Another thing coming up for this one is I think they got the earnings coming up very soon. Let's see. They had earnings in May. So February is usually the earnings report. So somewhere around there in the next few weeks, we have earnings report for Ron as well. So that's that one there. Let's move on to Target. Target is a very easy one. It actually really flows with the trend line, which is really awesome. So you could decide if you want to jump on it or not. But you see, since July last year, it's been kind of keeping that trend line. It bounced off here, kind of tried to retest it and went off, then came back down, went off. And again, just like Apple and Ron that we looked at here, if you look at this one, this area real quick, YZ, something is telling me is holding up this area. Either is keeping up with the trend line, or it's trying to bounce around this area ish. So let me move it down here, change the color here to red so it's more obvious. You can see resistance became support, bounced, came back down here, broke the support, but quickly held the support back again. Then the question is, why did he break that support to touch his trend line here? Let's have a look. If I draw another horizontal line here, I'm looking at here, previous support, previous resistance. Sorry, previous resistance, previous support. And it did the exact same thing here as well. You can see if I zoom in that, let me go to the bottom of the week here. It's exactly, so and it doesn't have to be accurate, but you can see some sort of reaction around here. If I want to draw it just to be extra careful with target, I could move it to another line down here. Make this one dotted, make that one dotted as well. So I have myself, you can tell it's a bit of resistance and support on this line here. It definitely was support here. This was resistance before it became support, went off. That was resistance before it broke through, retested, became support on this big green bar, came down. Then obviously we had a WSB reaction, a lot of pullbacks by the big company. Kind of tried to break that decline, but it couldn't. Obviously, came back. This was Friday, came back down on Friday, but held that line. See that line there? The 180 line was the exact same resistance around here, ish anyway. So as you can see, I'm expecting target to either be a green on Monday, or at least have a doji or something on Monday. And if it doesn't, if it retests the blue line, that might be a super entry. So target has dividends on 16th of February, I believe, or 17th or thereabout, 16th, and the earnings report is in March. So I'm expecting some sort of reaction around it. I don't know how far it will go, but if you look at the options real quick here again, I'm going to match. I've completely skipped February calls because I don't want to be playing around with this one. But March is expensive. I don't know. But anyway, it's up to you if you want to jump on this one. But there's a good open interest on the 210 call than 190, but they're really expensive. 210 is not too bad, but I don't like the spreads. But you never know. You could day trade this. I think this one is not bad. So 220. So those are possible. And you got great discounts on Friday. It was 220-ish last time. I'm expecting it to, sorry, 200. I'm expecting it to at least try to test 200 again. So you can get 210 and that probably will be your target exit. So I basically ran through tech sector, Sunrun, I think is solar, target obviously is consumer. Now let's look at the oil sector here. These are really interesting ones, and I'll show you why in a minute. If you look at the chart here, look at OXY, it's about the same thing. Look at Murphy oil, it's about the same thing. That's telling you something. They all move together, so you don't have to. You can either get one of these three. But let's go again to look at lines and trend lines and what have you. I'll start with Marathon Oil, MRO. That's a really good one, and these prices are reasonable. And these ones are even better than Apple, Target, and the rest. Because at $7, the options are cheap as cheap. But again, same principle applies here. Let's have a look at the trend line. Boom, everything matches. You could tell you're expecting some sort of reaction around here. Again, I'm not necessarily considering the last one. That's why if you look at Apple, the line that we drew here, we always want to get at least two before the last one. So that way you're not focused on the one before and the current one. You want to go way back to your trend line has to be 3 points, in my opinion, at least 3 points. So 1, 2, 3. If you go to the Sunrun, we did the exact same thing as well. 1, 2, and 3. If you go to Target, we did the exact same thing as well, all the way down here. The line is not accurate. Let me move it well. Here we go. So you can see 1, 2, 3, 4-ish on Target. You want to keep that same idea when you do trend lines as well. Don't be too eager to just draw a line and say, oh, it's going to fly. No, it's not going to fly. Your money is going to fly away. That's what's going to fly. So you must be really careful and make sure you draw at least, be very, very critical when you draw the line. So at least you can see. But this one, I mean, say no more. These lines are matching. 1, 2, 3, 3, 4, and you got another one around here. So I'm expecting some sort of reaction. Again, what do you do to prove, to kind of tell yourself how to get in? Just put this resistance, not resistance, put the support right there. It was resistance before, it broke out, became support, then became, so well, we haven't decided if it's support, if it's going to hold up, but he held up on, I think this was Wednesday, went up on Thursday, came back down, obviously Friday sell off. And this is actually forming a, I don't know if you want to call this hammer because it's got a little weak here, but I like this chart pattern here. You can tell this is probably going to reverse, or it's probably going to form a doji, then move up. But if you look at the previous ones, something similar to these bar here. Anyway, let's not waste time on this one. I'll spend more time on this later. But there's another thing I wanted to show you real quick on these ones here. If you look at this, if I look at this, it looks like a triangle here. This is one of the things we're talking about, trends, and we'll be dealing with these ones later. Sorry, not trends, chart patterns. This is actually, it looks like a wedge. You see, went up, went down, and it broke out. We'll discuss this later on. But anyway, let's focus on the trend lines. Change the color here so it's a lot more clear. This is the trend line I'm looking at. Started from around 5, then touched it around 5.7, touched it again around 6.3. Kind of did not go below that trend line for about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Then it broke out. Again, it's on that trend line here again. So I'm expecting some sort of reaction. Again, we're playing sectors. This is the oil sector. Oil sector has been taking a little bit of, it hasn't been trending as much since Biden became obviously president. But you, no, everybody still needs oil, so you cannot take that away. Just keep that at the back of your mind as well. But just to give myself much more clarity and where I need to be jumping off, if I jump on this call, if it doesn't go my way, I have another support line around here. If this doesn't hold, if 7.2 doesn't hold, I've got 6.9. So even if I get on a call around here, we'll look at the options in a minute. 6.9 is my good stop loss. The reason is it was resistance around there for a couple of days, broke out, came back. It didn't really hold, but it didn't stay long. Actually, let me put another line here as well so you see another reaction around here. So 6.9 and 6.6 basically I want to be looking at as my stop loss. You can be more aggressive and set 6.9 or just a soft one at 6.6. But you see the reaction at 6.6 here. It broke out 6.6, then it kind of had a resistance of 6.9, came back down to the support of 6.6 ish and bounced up, broke the resistance to 7.2 area, became resistance. Then again 6.6 was the support that held, broke again, came back down to the trend line, broke out of the 6.6. 6.9 was proving stubborn so many times. Eventually, it went into a wedge in here, then boom, broke out and broke out even the 7.2 resistance. Then that became support, went up to 8.3, 8.8, came back down to 7.2, and 7.2 has been holding. So if you get on a call now, like I said, we'll look at the calls in a minute. 6.9 and 6.6, they do tend to be your nice support. You could wait to get on the 6.9. That's if it breaks out of the trend line. You never know. Maybe a negative news or some sort of Biden administration talking about something else. It could come down. But if he follows the trend line like he's been doing for the past 5-7 weeks now, I expect some sort of green or some sort of level playing field between the buyers and the sellers. So we should see this reaction around there. Again, we're looking at really long options here. We don't want to play with February options because February usually is people selling. But again, we've had a lot of pullback, so I don't think this February will be like the other ones. Let's look at the March 19. Again, we're targeting I normally like to target where he fell off. So 8.3 was the previous resistance around here. I like to always go back to the resistance and look at, how much is it going to cost to get an option for that resistance area. And if you look at it here, March 19, $8 one is about $5 or $50, 0.55 or 58 or 60. It's about 8% discount. If you look at the open interest, it's about 1,400. But you can go down and look at even better ones around there. 9 is about $35. It's not bad as well. Again, like I said, look at the delta and look at the Fed. So look at this one, the $8 call. There's a reason why the open interest is high. You can see why the delta is really high, 42. So every time this goes up by $1, you get $42. So that's the way it is. If it goes every time you hold this for a day, you lose $1. So if this goes up to from 7.2 to 8.8, you could easily get $42 per each call. So if you buy 10 of this, which is about maybe you buy 10, or even if you buy one of this, 58. The next time this goes up by $1, this will be $100. Roughly anyway. So that's what you have to keep in mind. They don't have the implied volatility, which is interesting, but that's something to definitely look at as well. But this tells me there's a reason why most people are jumping on this call. $9 one. I mean, you could play a closer one if you want to, but I just want it really far. Like if you look at the $8 for February 19, you can see the open interest tells you a lot of people. Look at this one, 20,000 people think this is gonna be $9 by February 19. So, and you can see it's not bad delta to fair as well. Volatility is kind of not too bad, 70%, but I want it lower than that. 70% means a little bit aggressive but not too aggressive. A lot of volume came in on Friday, 70% off, and it's about $14. So you could load up on this one if you want to. Or you go to March 19, you could even buy some of the latter ones, like this one here. There's 1,300 people on the March 19, 16C, and it's only about $19. But look at the bid, there's nobody bidding for it. So I don't know. Last price was 13, so the spreads is really high on this one. I don't think I'll touch it, and the Greeks are not great. So that's something you have to keep in mind. All right, let's move on to OXY. If you look at OXY, it's the exact same thing as Morphe. So I'm just gonna really quickly go over this one without even explaining what I'm doing here. I think you guys should be able to follow through. Let's just put a line in there. And I specifically chose the red one here. You could choose the green one if you want to, but choose the green one here. So at least I get this point and I get points here. I'm not too worried about this one. I'm more worried about these two at least matching up. And if I could really zoom in, you will see what I'm trying to do. I'm trying to make sure I get again, like I said, it doesn't have to be accurate. At least I got 2 of them on here, 3 of them, 1, 2, 3. And I think I got this one here too. So this one here is good. As you can see, OXY, exact same thing as MRO here, that drew the line. I'm gonna go ahead and draw the support and resistance just to give myself some sort of indication when I jump on this call. If I do get this call, where's my support? Where do I need to put my stop loss? 20.06 or 20.19. Let me move it down here. So 19.77 ish area. Again, it doesn't matter to be accurate, but I do see a couple around here. So 19.7 is where I'm hoping will give me support like it did around there. But I also noticed, just like MRO, it did drop down a little bit, not too far from that, where it's currently at. So 18.93 is another place. And I'm seeing a lot of action around here as well. So I'm going to put the line here, right there. So I'm looking at 3 levels here. If I jump on OXY, I want to set my stop loss around 18.9, 17.8. And obviously I'm expecting it to bounce around this 20. If it doesn't bounce, I'm also expecting it to bounce from here. If it doesn't, obviously if you want to be aggressive, you can set your stop loss at 18.9. If you want to be soft aggressive, you set your stop loss at 17.8. And we have a look at these contracts real quick as well. Keeping to the same expiration, 19 March. I'm looking at the previous high, like I said. So let's zoom in first here and let's have a look. 24.6. That's a lot. Yeah, this one was moving. I mean, we clocked in a couple of times on this one with the $100 challenge. If you guys are participating in that one, you would have seen that we played this. I think we got on this green bars, we got about 250% increase in there. So open to see another increase. But 24.6, if I go to 24 contract, oh, I'm gonna make 25 contract. You can see a lot of see a lot of reaction here. 27,000 open interest. That tells me they know something. Let's have a look at the Greeks. Not too bad. This is 14 times better. So if it goes up by $1, and we're saying 25. So if you could really do the math here, it's a $20 now. If it goes up by $5, and the delta changes every time it goes up by one. This 20.28 becomes 0.28 plus the gamma. Let's have a look at the gamma. I don't want to waste our time, but let's just show you. So the gamma, if the gamma kicks in, so the net, if it goes up by $1, this will turn to 34. If it goes by another dollar, it will turn to whatever the gamma is. Let me take the gamma out so we don't have enough. But anyway, I see the 25 call will be really great for March, 19 March. And we're going to put this out in the watch list. And that's one of the ideas with these videos as well. Some of the calls we're going to put out in the watch list. David and I and Lou and some of the others will try and go over some of these analyses and put them out with videos so you can see what we're looking at. Just clocking in here. But anyway, $28 is the delta, $2 is the theta. So you can see this is about 14 times. And we like to follow the money, 27,000, about 440 people joining as well. So this will be 28,000 open interest by Monday. 74% implied volatility. Not the best, but not the worst. I mean, I think GME is about 500%. That's crazy, but there's a reason. It means the price is aggressive, moves, but not too aggressive. Excuse me. And you can see the price is about $96. And I believe if you come down, you probably see another one around it. So this one, the $30 contract is about 4,000 open interest. The implied volatility is about the same as the $25 one, even if not more. And you can see this is $14, and obviously the theta is really not bad as well. This is cheaper. It's about $47. Again, like I said, this moves a lot. So if you look at it, 19 February one for the same strike, 25, this is even cheaper. And you can see here the 4,000 is the open interest. Ish is in open interest. Hold on. Sorry about the delay. Yeah, so 4,000 is about the open interest. The price is not too bad here, but again, this is 19 February. I'm looking at this and I'm going, yeah, I don't know if I want to stay too close here, but you never know. You never know. I mean, this is cheap. Again, if you keep the support and the resistance as the stop loss, especially this one here, the 18.91 as your stop loss, even make it more aggressive, move you up, then I think you could let this deploy to 19 February. If it goes way down to 18.9, then you could basically leave and take that as a loss and wait for the bounce. But I think you might respect the trend line, so keep that at the back of your mind. But as you can see, 25 is about 3,000. 24 has they got some really high volume ones here, like 8,000 open interest here. This is about $72. And you can see the delta is not bad as well compared to the theta. And I think there are some like 28 and the 30, they got nice open interest in there. But I don't like the Greeks. They're not too great. So if it goes up by $1, you only get $9, which is not too bad if you're buying in volume. Like this is $25. You could buy 4 of this compared to one of these $25 call here. So that's the thing you have to think about as well. You have to choose the right price, what's good for your portfolio, and go from there. But I'm expecting some sort of reaction around here. Again, Friday was the seller. That's what we saw it green. But I think the oil sector should be kicking in Monday or Tuesday. So let's keep an eye out on that one. Another one in the oil sector is Murphy. It's the exact same thing as MRO and OXY. So if you look at the Murphy one as well, not spending too much time here, just looking at, obviously, I need two lines to meet. Here, this one is a little bit complicated, but let me draw it from here. Just draw it right there. As you see here, from my own reckoning, I think this dropped off from the trend line. I think this one came down all the way down from the trend line. So this trend line has been invalidated. I'm going to try and reverse engineer this. Actually, I'm just going to do support and resistance for this one. And this is actually a very good example. So if you want to look at the this is a good example where if he drops off the trend line, you don't want to don't hold on to a trend line. Move on to the next thing. As you can see here, this trend line here was invalidated. So I'm not even thinking about this trend line anymore. So we go to our go-to and ever present support and resistance. And what I'm doing here, I'm looking at July action here. I'm not focused on this one. I want to see what the prices were around this area. So I do this, put this as red. This is the support here. You can see it was resistance around here, support here, support. Came all the way down here. Then obviously $7 was the $7 around there was the support. Obviously, if you bought around there, that would have been awesome. But we did not buy here, so we're not going to look back. Anyway, as you can see here, I see a lot of it went up. Let me draw this trend line again from here. So if I do this, and this line here, take this one very, very light. I'm not really focused on this one, but the idea with this one is if I want to play this and you use this trend line like this, then this would be awesome. But in my opinion, I think this trend line here, it broke this trend line here, in my opinion. And I think that's definitely something to think about when you're drawing the line. Always be, don't be too biased when you're drawing the lines. And I think he broke the trend line here. And I think he's trying to form another one here. Just judging by these two, I need much more reaction around here. But if you want to go with this, the support and resistance around $12, you can see there's some sort of action here. And what you will see as well is around there, there was some sort of resistance there. So it's in between these two lines. I think it will probably linger a little bit before it goes back up. If he holds on to it. If he doesn't, that's definitely this area. I'm not really 100% sure of Murphy or now. Like I said, I don't want to assume this support line will do the trick, but this trend line will do the trick. If it doesn't, I want to be looking at, I definitely want to study this more before I jump onto it. I see the trend line here forming something. I see one line here, another one here. So if it touches this, then it should be fine. Then drawing another one again here, let me pull the line down right here. I see some sort of support around here, around 11 MAC. So even if you get in here, you could either, if you get in now on Monday, you could either set your stop loss. Let me see. Let me put it here. Set an aggressive one around 11.68, or set another aggressive stop loss around around this line here, which is 11.1. So that's another way to play this one. But just keep in mind, I think he fell off the trend line here, this big red bar, and he's trying to come back, but it did not hold. So I'm looking at the resistance around here. Put a line here. So another resistance around here, which is the 13.9. So if I want to play this, I'll probably play the 13.9. You see, if you look at this, it's actually going up and down in this wedge. So I won't be surprised if it breaks out somewhere around there, But again, let's have a look at the options. Hang on a minute. Yeah, let's have a look at the options real quick here. Again, we're sticking to March 19 plays. So the March 19, again, we focused on our previous high, which was 15.9. I mean, these stocks were really high before obviously COVID-19 and a lot of other factors kicked in. This is COVID-19 decline right there. It actually came down to 4.5. But if you do the weekly, you will see it's almost about the same reaction. The weekly is actually not bad. So if you want to play the weekly, you can see so somewhere around there. So this trend line here wasn't the most accurate. It should have been somewhere around there. So if you go to the daily, there's still more room down here. So anyway, that's when you compare daily and weekly sometimes. But if you look at the weekly, you can see a lot of the oil sectors are definitely coming back. Like this is another trend line for the weekly. If you start from 4.5, it bounced around there. So I think this might go up still and come back down here. I don't know. I'm just putting it out there, but I won't hold on to the weekly for these. I think we're playing momentum. We're not going too far. For long trade investment, you want to be following 4. You should have jumped in around 4.5, jumped in around there as well. So you have to wait for it to come down somewhere around there. I don't know where it will, if you do that same thing, but it's definitely reversing. It was coming all the way down before. And I hope we don't see some sort of reaction like this, like an ABCD all the way down. I don't think we'll see that there. So we might see another one come down there and keep going up. These are long-term plays, and I think they pay dividends as well. So keep that back in mind. Yeah, they do pay dividend, $13 dividend. But anyway, same thing as the Morphy oil, the OXY and the MRO. The previous high was 15 before you dip hard and dip on Friday again. So let's have a look at the contract. Sticking to March 19, there is actually 15. So the open interest is not high yet. So they're probably saying the same thing I'm looking at. And you can see that the open interests are not too great. And that's because he broke out this trend line. I think they're not really sure if he's keeping this new one or not. And we all could be wrong. So that's another thing to keep in mind. But if you look at the 15, the Greeks are not bad. They're really good actually. So if it goes up, and it doesn't show us the implied volatility, but I don't think this one has got that much. The price for the 15 is actually too high in my opinion anyway. So if you look at the February 19 for this one, let's look at 15. The price is not too bad. And bam, look at the open interest, 15,000. So they know something. They definitely know something. The Greeks are not too bad. This is 12 times, which is great. So if it goes up by $1, you get $24. Added to your 40 is about 64 if it goes up by $1. So that's definitely something to think about. Again, like I said, set your stop loss at this green guy here, which is about 11. If you want to be more aggressive, you can set it at 12, and Murphy should be cool. So let's look at XONE. XONE has been reaping for the past few days. As you can see on the daily, even on the weekly, you could tell definitely reversing on the weekly. I don't know if you ever get to 2013, $78, but he's definitely reaping. And yeah, so that's XONE is, I don't know if you want to play XONE now, but let's have a look at the daily chart. Oh, so the daily chart is telling me that it's keeping this support. You know what? I know we haven't talked about Fibonacci a lot, but I'm just going to do Fibonacci on this one. Just to have a look at this to this and see where we are. And bam, it shows us what's been going on. Every time it crosses one of the bands, it kind of goes sideways. Cross the band twice here, went sideways. Cross the band twice here, went sideways. So I'm expecting a reaction here on Monday or later on this week. So this is something you should actually think about. Fibonacci shows you the retracement, and obviously, it sometimes tells you how far it's going to go back up again. Like I'm definitely interested in seeing this one. I think it's going to break. Right now, what's the price? 27.7. I think it's going to break 28.9 and go for the all-time high test again. As you can see, it's almost the same reaction apart from this day. I don't know what happened here. A couple of reds around there, but it's definitely picking up volume. Another thing you could do if you don't want to do Fibonacci is obviously, like we'll be setting the traditional support and resistance. Just pull a line. See a couple of reaction around there. Around 25 is a 27 now. Put the resistance obviously at our high on the daily, which is about 30.5-ish. So it's currently here. I can't really see much bars to decide. So I'm going to try the 4 hour. Look at the 4 hours, it's telling us something here. The 4 hours is telling us there was some sort of reaction to this 28.3. So it went over, it came back down. A big red bar. ALD 25 went up. Someone bought in at 30. I don't know why, but came back. They didn't really go back down. Now it's going back up again. So this one is this 28.3 mark is a really good test to see if he's going to break it. His test is, you can see the long wick, it definitely wants to go up. You see all the wicks pointing up, definitely wants to go up. People want to buy in once it crosses. I think once the volume kicks in, and you can see the volume down here, you can see the volume, lots of green bars here. So another thing to check out when, if a stock is going to break out, look at the volume before this year. The volume was really low. Then all of a sudden the volume started coming in. You obviously could see that in the price reaction as well. So let's have a look at this 30 call, or if you want to be, let's go back. I can't see any other reaction. So this is going all the way down to all the way back. So anyway, I'll focus on this one. I'll look at the 30C real quick. Let's have a look at the 30C for February. Yeah, 145%. That's kind of scary, but look at the delta. That's $48. This is about 10. This is almost times 4. The volume came in, really good volume came in on Friday. This one already went up by 66%. 25 was our loading zone. I think we missed this one a little bit, but we could play a risky one. This is expensive for me, in my opinion. Let's go down there and look at 40. 40 is not bad as well. I think 250 people came in. The Greeks are not so great, but they're not bad. This is almost times 3. So it's definitely something to jump on. Then let's jump on match. Again, we're looking at 30C. Not too bad. The Greeks are awesome if you want to pay this price, but yeah, I don't know. It's up to you, but this is definitely, it's got potential. I think it's older than this 25. You could play a risky one for the 40 for 19 match. It's about 265. Yeah, there's a lot more options out there you could buy, but if you really want to play this call, set your aggressive stop loss of 25 so that you don't lose. At least if you lose something, you don't lose a lot. You can see the volume coming in is not good as well. I think the February one is actually not too bad. This volume is telling us something. The implied volatility is not great, but the price, yeah, 350. Or you play this one, 250 volume coming in is not bad as well. 145, 92%. So this going up. You see people bidding at 70. Yeah, this spread is not great. So,
hey, Ken, take a look at August, the $40 call.
Let's have a look at August. So August, yeah, it got 30. Yeah, the Greeks are awesome. See the 62 to 2. That's about $30. Sorry, 30 times more. So that's great. If it goes up by $1, you get 62. Obviously, you're paying the price for it, but this is awesome. Open interest 247. Not too bad. Yeah, the price is something. It's premium. You got the $5 one. Is a 50, the 40 call is not bad as well. Obviously, you're paying premium for these guys, yeah. But open interest, the volume coming in. Or the Greeks in August are awesome. Like the Greek on this 25 call, for instance, 70 to 2. That's 35 times more. If this goes up by $1, you get 70. But if you look at the price, you gotta be paying 1,000 for this. So that's definitely something to look at. And like I said, we'll post the plays out if you guys want to jump on it. These are some of the plays we'll put in the watch list this week. We also got so many more, but this is the first time we're trying to put our watch list on the video. I think we got one more. Let me just look at the last one before we conclude. Sunworks. Skyworks, sorry. Skyworks Solution is another one. Let's have a look at this one real quick. As you can see, the trend line is beautiful. We start from here. Like I said, I'm trying to get like 3 points. So if I look at these two and this and roughly like this. Anyway, I'm trying to be approximate. I don't have to be exact. Yeah, you can see there's some sort of reaction here, and I could move here as well and just make it even a lot. Okay, let me do something. So I can move the line here. Bingo. So you can see, I would love to start from here, but it doesn't really matter if we start from here as well, just to show you what we're looking at here. The trend line, it came down, went up, came down, then rose up to 180 something. Yeah, this is a big boy one. Came back down. Let me do daily. I think the 4 hours is a bit confusing. Here we go. So this is a lot more clearer. So I've chosen 1, 2, 3 lines. For some reason, there's a massive spike on the daily. 28, it was 160, went up to 180 on the 27th, and came back down. People were selling on the Friday. It actually stopped at the resistance around there. I put it around there. But he hasn't really touched the resistance. Yeah, I think this one is really gap, but it's definitely something to watch out for. There's another line there. I honestly wouldn't touch this one now. It's just my opinion. I could be wrong. Because I think, yeah, there's a massive support from year to year. There's a big gap here, though. If I look at the daily, okay. There's a big gap around here. Let me see. Yeah, there's a gap around here. I think most of the stocks are normally bounce on the gap. I don't know. We have to watch this one closely. I think he may want to test 163 again if there's no news out. And Weibo gives you a lot of the news here. I don't know. There's no news. I haven't seen any specific news or price target raised to 195. So that one was a big news 2 days ago. That was on Friday. So that's why he jumped on Friday. They raised the price to 195. Another analyst raised it to 190. And another thing you could do on Weibo is you could look at the analysis here. The rating is a buy. Out of 29 people, 58% rated as a buy. Strong buy by 6% of it, then hold and no underperformance sell, which is great. You can see we still have a long way to go. 196 is the average, and some of them are saying it's 245. So we got a long ways to go, and you can see he's trying to break through this resistance line right there. You can see it goes all the way, all the way, all the way. The support is way down here. But yeah, I would love to get in on this line here, 163, if you want to get on the long call, or just watch your reaction here. I think you would try and come back down and gap down. A lot of the stocks gap down. They don't have to, but it's definitely something to look out for. And if you look at the options, February 19th, I normally tend to run away from the weeklies for some reason. The prices come in late and they're always high. So if you look at what was the max? 188. If you go into the options here, look at the 188 call for February. It's about 190, so that's not bad. It's about 194. It's not too bad. Implied volatility, not too bad. Greeks are not great. So this is 170. This is probably going to be expensive. Yes. Greeks are awesome. Volatility is really low. A lot of open interest. So hopefully, if this goes down, you get a discount. I don't know how much discount you're going to get from 740. I think
the 200's got a lot of volume and open interest.
Yeah, a lot of people came in on 200 one, on the 200 one. That's about 1,200 people bought this at 127. The spreads are not too bad. I think it's because a lot of people were selling on Friday. It moved up by 104%. The Greeks, the Greeks, the theta is more than the delta. So this is what we're talking about. Like, watch out for this scenario, because if it doesn't go your way, you lose money faster. But the implied volatility is not high. If you have a theta that's more than delta and implied volatility is not more than 100, that means well, first of all, it means you don't lose that much money if it goes down, but it also means you don't gain that much money when it goes up. So that's why if you look at Tesla, you have 170%, and you have the theta really high, delta really low. And when it goes up, the IV makes you make more money. The Greeks don't make you make money. If your Greek is not playing nicely and your implied volatility is not high, if it goes down, you lose money on both sides. So that's one to watch out for. But at this price, I think a lot of people believe in this company is going to go back up. If you want to go really far and just be safe, let's have a look at this one. Yeah, these will be expensive. Yeah, these ones are expensive. We got the 200 match, which is about 259. And if you look at the Greeks, yeah, these Greeks are not bad. Not that much open interest, but the volume came in on Friday. On Friday, so this probably go to that 450 open interest. I think it's building up. If you want to invest, this might be better. Like the spreads are not too bad as well compared to the 195. Look at the spread; it's almost 200. So this one is not too bad. Again, the Greeks are not awesome, but at least they're better than. And this is almost two times more, which is our minimum. But yeah, this gap here is the only thing I'll really be careful for. I think 163, if it ever comes down to 163, a lot of the times they bounce on this gap. The gap is essentially because of overnight, buying when they saw the news price target being raised. So there's a lot of bag orders now, and it bounced there. If it comes down and it bounces, I think it's really awesome. So this, again, you can set the alerts if you have an account with Webull. Set the alerts at 163, and worst case scenario, set the alert at 154. That's where you could jump in. And I think if it ever comes down, I don't know, probably down around here. I mean, that's me hoping that it will ever come down to 157. If it does, that's a definite buy right there, because a lot of the contracts will have gone cheaper. All right, that concludes our technical analysis for today. We'll try and do more and more of this, but we'll focus on these tickers here. We'll put them on the watch list. We've got so many on the watch list that we're obviously pushing out today. The reason why we'll be doing these videos, like I said, is so that we can focus more on the research. And obviously, if you guys have your watch list and any questions you have, please bring them along. Another thing we'll be doing very soon is we'll be opening up the floor for a lot of our strong members to kind of give us their own inputs as well. Like today, we have David on the call, we have Lou on the call, but next time we'll probably have more people, and we'll focus mainly on sectors. Like you see here, we focus on tech, commercial, consumer, solar, and oil sector. And hopefully next time we'll focus on more sectors, probably just do 2 stocks on one sector. And, we'll also be putting out, more like a form so that you guys can send us what stocks you're looking at, so we can break it down in the video for you so that we don't waste time on Sunday. We'll focus on the research. Other than that, this is Ken, like David would say, 1 half of doing numbers. We'll catch you guys at 5 o'clock. Thank you.